Hi, this is James Shug with Westpac London's end of day report for Monday, February the 27th, and with apologies for missing the last few days due to problems with my voice. Bit of a risk-off day today, particularly in Europe. Not unexpectedly, there was disappointment following the G20 meeting in Mexico, which saw Europeans leave with no commitment from outside of Europe for further funding support for European sovereigns. The argument being that Europe could do more to help itself, Europe meaning Germany, of course. The Germans, in fact, are voting right now on the latest iteration. Probably won't be the last, but it's the latest iteration of the Greek bailout, and the result of that vote is what the Germans will take to the EU Leaders Summit on the 1st and 2nd of March, the end of this week, where that Greek ballot presumably will be finally approved. In the process, default on March 20 avoided by Greece. Default for now. But there was disappointment, nevertheless, in European equity markets that there was nothing more forthcoming from the rest of the world. As I say, no real surprise though. Disappointing results from HSBC as well, hit the banking sector, and all of that meant that European markets were off today, right across the board. Just ahead of the close, it's about 4:45 in London at the moment. We've got the FTSE down 0.6%, the French market down 0.9%, Germans are down 0.5%, the Spaniards down 0.2%, and the Italians down 1.4% today. US markets are a bit stronger. They did open weaker on the being dragged down by Europe, but again, impending home sales in January and a solid Dallas Fed factory survey for the month of February, the strongest reading since late 2010, in fact. Were two pieces of data that added to the sense that the US housing market is showing tentative signs of recovery off a very low base, and that there's no evidence yet that the apparent upswing in the US economy, at least as measured by various business surveys, there's no evidence yet that that's starting to fall away, like it did when we had the upswing in 2010 and 2011. So for those reasons, the Dow's currently up 0.2%, having opened in negative territory. As I say, it's only just 4:45 in London, so still plenty of hours of trading to go in the US. Commodity markets, well, as they stand at the moment, we've got oil down 0.7% today at $109 a barrel, still pretty high there. And a lot of questions are starting to be asked. Is this going to be inflationary for countries in Asia? Is it going to be a dampener on growth? Not just countries in Asia, of course, in Europe and the US, it could even be an issue as well in terms of hitting consumers' disposable income. Other commodity prices, gold unchanged today, $1,776 an ounce, and copper prices are up 0.5% today. Aussie dollars up 1% since the London morning, was 1.066 when I got in. It's 1.076 against the US dollar at the moment. No Aussie data to watch for today. Your session, we've got some Kiwi employment figures coming up in New Zealand, but that's about it for today. I'll be back, voice permitting, tomorrow.